Welcome to Space Nexus. Please subscribe and hit the bell icon for more breaking updates. As autumn 2025 arrives, North America faces a dramatic economic split. The US is rocked by a wave of layoffs, with once stable companies cutting thousands of jobs and uncertainty, clouding the American dream. Meanwhile, Canada is quietly thriving, adding jobs, seeing a stronger dollar, and building cautious optimism. The contrast is striking. Americans worry about automation and instability, while Canadians focus on growth and new opportunities. How did two intertwined nations end up on such different paths? The answer lies in technology, policy, and leadership choices. Understanding this divide is crucial for both countries as technology and global trends redraw the map of opportunity. Today, we'll explore the forces behind this economic divergence and what it means for the future. The American job market has been hit hard and fast. In cities across the country, the once bustling office towers now echo with uncertainty. Employees who once felt secure are suddenly packing up their desks, carrying their careers out in cardboard boxes. The sense of stability that defined the American workplace for decades is now being shaken to its core. In October 2025 alone, U.S. companies cut over 153,000 jobs, the highest monthly total since 2003. The headlines are relentless, each one more alarming than the last, as the numbers climb higher and higher. For many, this is not just a statistic, but a personal crisis. This surge, up 183% from the previous month, signals a rapid and unsettling shift. The speed and scale of these layoffs have left workers and analysts alike scrambling for answers, as families across the nation brace for what comes next. Over 1 million job cuts have been announced this year, with the tech sector at the epicenter. Silicon Valley, once the symbol of endless opportunity, is now ground zero for a wave of pink slips. The giants of innovation are suddenly shrinking, and the shockwaves are being felt far beyond California. Tech giants, once job creators, are now leading in layoffs, spreading anxiety far beyond Silicon Valley. The uncertainty is contagious, as smaller companies and startups follow suit, tightening their belts and letting go of valued employees. The sense of optimism that fueled the tech boom has given way to caution and fear. Companies are slashing costs and embracing automation, especially AI, to protect profits. Across industries, executives are betting on technology to do more with less, hoping that machines can fill the gaps left by departing workers. The march of automation is accelerating, and its impact is being felt in every corner of the economy. This isn't just about budgets. It's a fundamental rethinking of work, with machines replacing people. The very nature of employment is being rewritten, as tasks once done by humans are handed over to algorithms and robots. For many, the future of work feels more uncertain than ever before. The pain is widespread. Logistics, retail, and manufacturing are all making deep cuts. From warehouses to shop floors, the effects ripple outward, touching every link in the supply chain. No sector is immune, and the consequences are being felt in communities large and small. UPS, Intel, and Target have each shed tens of thousands of jobs. These are household names, pillars of the American economy, now forced to make painful decisions. The scale of these layoffs is unprecedented, and the uncertainty they create is spreading. The result, a systemic issue, not just a sectoral one, raising fears of a broader economic slowdown. As layoffs mount, consumer confidence falters, and the risk of recession looms larger. The interconnectedness of the modern economy means that no one is truly insulated from the fallout. As consumer spending power shrinks, the ripple effects threaten the entire economy. Families are tightening their budgets, businesses are seeing fewer customers, and the cycle of uncertainty continues to grow. The American dream, for many, feels more distant than ever. The strömsur sin Surrey, understood the desire, but in God's for non wide stand Saxon, Surrey's on Droid, from bustling cities to quiet towns, Americans are bracing for what comes next, hoping for relief but preparing for more turbulence ahead. To grasp the scale of the U.S. job crisis, look at the details. Amazon is cutting up to 30,000 jobs, redirecting resources to AI and data centers. Microsoft, Salesforce, and Chegg are all slashing staff, citing AI's growing capabilities. Even startups and industry leaders like Rivian and Meta aren't immune. The numbers reveal a new reality. Even future-focused firms are making tough choices as technology reshapes their workforce. Conflicting job reports add to the confusion, with weekly data showing a sharp decline in private sector jobs. The lack of clear, timely data leaves Americans and economists in the dark. The job market's collapse is both deep and fast-moving. Political paralysis in Washington is making a bad situation worse. As lawmakers remain locked in bitter debate, the effects of their inaction are spreading far beyond the halls of Congress, touching every corner of American life. The U.S. is in its longest government shutdown ever, blinding the nation to its own economic health. With each passing day, the uncertainty grows, leaving millions of Americans unsure about their future and the stability of the country. Key agencies like the Bureau of Labor Statistics are closed, leaving a critical data vacuum. Without these essential reports, policymakers, businesses, and everyday citizens are left guessing about the true state of the economy. Without reliable numbers, decisions on interest rates and investments are being made in the dark. Financial markets are jittery, and investors are pulling back, unsure of what tomorrow might bring. The shutdown is dragging down GDP and eroding confidence daily. Businesses are delaying hiring and expansion while consumers are holding off on major purchases, waiting for signs of stability. Consumer confidence is plummeting, with nearly half of Americans doubting their retirement prospects. Families are rethinking their budgets, and many are worried about making ends meet. People are cutting back on spending, a classic sign of economic anxiety. Retailers are feeling the pinch, and local businesses are struggling to stay afloat as foot traffic dwindles. The housing market is struggling, with unsold homes piling up and builders offering major incentives. Construction projects are stalling, and real estate agents are seeing deals fall through as buyers grow cautious. The shutdown isn't just political drama, it's an economic anchor. Every day it drags on. The weight on the economy grows heavier, slowing progress and deepening uncertainty. The message to the world: U.S. leadership is gridlocked and uncertain. Allies and rivals alike are watching, questioning America's ability to lead and to keep its promises. The consequences are rippling through every household, as families face tough choices and an uncertain road ahead. The longer the gridlock continues, the deeper the scars on the nation's economy and its people. Artificial intelligence is at the heart of America's layoff crisis. AI adoption has surged, with over half of U.S. small and medium businesses now using it. Globally, 78% of companies use AI in at least one function, fueling rapid job displacement. OpenAI's business clients have soared, accelerating the cycle of automation. The rise of AI is also driving a boom in energy-hungry data centers, straining power grids. Salesforce's layoffs show how AI is replacing thousands of jobs in customer support. This pattern is repeating across industries, from logistics to content creation. While AI boosts efficiency, it leaves many searching for new work. The future of work is being rewritten, forcing a national conversation about jobs and technology. The double-edged sword of AI is cutting deep and fast. In contrast, Canada's economy is quietly booming. October 2025 saw 67,000 new jobs, far surpassing expectations. Consumer spending remains strong, fueling growth in retail and services. Construction is up, with building permits rising, and developers confident in future demand. Canada is also investing in its own defense industry, creating high-skilled jobs and asserting independence from the U.S. The Bank of Canada is holding steady, with little pressure to cut rates. This stability is reinforcing confidence in the economy. While the world watches U.S. turmoil, Canada is building strength and strategic independence. It's a standout performer on the global stage. Currency markets reveal the economic split between the U.S. and Canada. The Canadian dollar is strengthening, reflecting job growth and investor confidence. International investors now see Canada as a safe haven. Meanwhile, the U.S. dollar is weakening, mirroring economic worries and political dysfunction. The USD-CAD exchange rate has reversed, signaling a shift in momentum toward Canada. For Canadians, a stronger loonie means cheaper imports and more purchasing power. For Americans, a weaker dollar is a daily reminder of economic struggles. The tale of two currencies sums up the broader story, diverging fortunes on either side of the border. Currency trends matter for everyone, not just traders. The economic divide is now visible in every dollar exchanged. Behind the numbers are real people, over 1 million Americans facing layoffs in 2025. For many, these job losses aren't just statistics, they represent lost dreams, upended routines, and the sudden uncertainty of how to pay next month's bills. The ripple effects are being felt in every corner of the country, from bustling cities to quiet rural towns. Families are anxious, professionals are scrambling, and communities are feeling the loss. Parents are forced to make tough choices, cutting back on essentials, and putting future plans on hold. Local businesses, already struggling, are seeing fewer customers and shuttering their doors, deepening the sense of crisis. The tech sector's collapse has shattered the illusion of job security, fueling widespread anxiety. Once seen as a ticket to stability, tech jobs now seem just as vulnerable as any other, leaving workers to question what the future holds for their careers and families. This economic pain is spilling into politics, with anger at both corporate leaders and politicians. Protests are erupting in cities across the nation, and town halls are filled with frustrated citizens demanding answers and accountability. The shutdown is deepening cynicism and fueling populist movements. Many Americans are turning to new voices and outsider candidates, hoping for change as traditional leaders struggle to respond to the crisis. In Canada, economic stability is supporting political calm and national pride. The contrast is striking. While Americans grapple with turmoil, Canadians are enjoying a sense of security and optimism about the future. But Canadian leaders must ensure growth benefits everyone and manage the impact of a strong currency. There are concerns that prosperity could become uneven, and leaders are under pressure to keep the economy inclusive and fair. In the U.S., debates over the social safety net and policies like universal basic income are intensifying. Lawmakers are facing tough questions about how to support millions of displaced workers and prevent further hardship. The AI revolution is forcing both countries to rethink what they owe displaced workers. As automation accelerates, the need for retraining, education, and new opportunities has never been more urgent. The social fabric is being tested on both sides of the border. How each nation responds will shape not just their economies, but the lives and hopes of millions for years to come. The diverging U.S. and Canadian economies offer a lesson in adaptation. For Americans, the AI revolution demands new skills and lifelong learning. Policymakers must end the shutdown and invest in education, retraining, and a stronger safety net. The U.S. needs to move from crisis management to strategic planning for the future of work. Canada, meanwhile, should use its stability to invest in innovation and prepare for global challenges. Both nations must support workers through technological change. The economic shifts we see today will shape opportunities for generations. Citizens must stay informed, engaged, and demand more from leaders. The future of work and prosperity depends on choices made now. The story of these two economies is still being written. We all have a role in shaping the next chapter.